Maverick traders, welcome out to your market roundup for August 21st. We have just passed August monthly options expiration, and let's get to it. So here's what we'll be discussing today. As always, we go through the broad markets, we'll talk about commodities, we'll go through the internals of the market, talk about the sector heat map, where money is rotating, which is critical to finding the next opportunity, and then as always, we'll highlight bullish, sideways, and bearish trades.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so as we look at the markets, there wasn't too much going on, but definitely the NASDAQ was the big outperformer. And the NASDAQ and the S&P both have exposure to large cap tech, so that kind of pushed the S&P higher. But you can see markets that don't have that tech exposure. The Dow was flat, the Russell 2000 was flat, gold and oil were flat, so it was really a tech day. Now, a couple of pieces of news. The daily news, ARM Holdings, which is a semiconductor company, filed for its IPO. Why does that matter? Well, think about when you file an IPO, it doesn't mean that it's a bad thing, but it means that the owners want to sell. They're going public, they want to cash out. Is this a good opportunity for a company that owns ARM, which is a private equity firm, to come in and sell? Well, absolutely. Tech stocks and semiconductors have been on a tear this past year. And so you have to think about motivations. You have to think about, well, they're pretty smart and they're aggressive sellers here wanting to cash out. It doesn't mean that the entire sector is overvalued and has to collapse, but it certainly tells you that they think it's a great selling opportunity, maybe not so much buying opportunity. Bitcoin has plummeted but is holding 26,000. Again, this is a risk analysis type of idea. Bitcoin tends to trade with risk, and right now it's been plummeting. So we've seen the market internals definitely take a hit. Advanced decline line about half and half, because like we said, today was a half and half day. Not a whole lot other than tech. The 50-day moving average has definitely turned more negative. 71% of stocks now below that 50 MA. Now, if we take a closer look at the S&P, some important levels. Obviously, we broke the 50-period MA. That is a critical zone. We plunged to new lows. Now we're in the bounce back area. This is where you would think that maybe we'll put in a lower high. And there's some symmetry here if you look at the price action. Look at the lows there. And if we just sort of drag a line over, look at the lows there. I think it's very possible that the highs back in here could be where this bounce takes us in the short term. And that would set up actually a price pattern, right? A head and shoulders type of price pattern. In a head and shoulders pattern, this area of support is called the neckline. This is a shoulder, this is the higher head, and this would be a shoulder over here. So it's really a bullish to bearish reversal that's taking place. That's what the S&P 500 looks like. The NASDAQ, very similar. Higher highs into what are likely to be lower highs on this bounce. I think the NASDAQ is a little bit more heavy than the S&P. Maybe my thought would be that it won't even have enough strength to get up to that same level, or maybe stops just shy of that would be my kind of estimation. But either way, I think this is a market that has started to roll over, and we would have to say, okay, we're in sell the rally mode. Now, history shows us that volatility is a signal usually that things are more bearish. So one might look at Tesla up 7% on the day and the Nvidia up 8.5% and say, oh, the markets are healthy, they're recovering. Actually, the biggest rallies happen in more bearish markets, right? It's like a spring back. type of mode. These have been hammered, hammered, hammered. And so the big rally for one day is a spring back. It's heavily shorted. The short sellers are covering and so on, but it doesn't really speak to a stronger market environment. Typically, in a strong environment, volatility dies down and you get that grinding price action higher. So I would look at this as more of a negative that you're seeing such big rallies on the days where something like Nvidia and Tesla are up. That speaks to a more unhealthy market as opposed to a stronger, more healthy environment. So let's jump over and look at a few trades here. We've got AbbVie, Dick's Sporting Goods, and NUE. This is Nucor, a steel company. We've got Apple, AEM, which is a gold miner, PayPal, and Square on the bearish list. Taking a look at a few charts, AbbVie's on the bullish list. This has certainly been in more of a downward trend, but starting to build and starting to recover. Of all the stocks out there, there's not a ton that are above their 20, and we already talked about 70% of stocks are below their 50. So is this a pullback worth buying? I suspect. Again, the market looks like it should bounce for a few more days, and healthcare can certainly lead us to the upside. Dick's Sporting Goods reports earnings this week, but it is set up for a mother of all breakouts. It's certainly possible as we've hit this resistance over and over again. A gap up above that would be a nice breakaway gap. And if I were making a guesstimate, which it's exactly what it would be, I would anticipate a higher move on earnings. Doesn't always follow the trend, and I don't have any special insight into the fundamentals, but I would err on that side. If we look at the bearish list, after a little rally, I would love to get short something like Apple. Again, I think this is everything that's somewhat wrong with the market is what had been right. We're top heavy. These large cap tech are now a weight pulling the markets down. As you recover, you see lighter volumes, and I think that continues. I think that persists. I would anticipate that the Apples and Microsofts and so on are going to go lower. And we talked about Square last week. It's gone even lower. Here, I think you could set up a little inverse cup and handle. So this is where we should bounce, but the bounce should take us up a few more points and then it should fail. And if you want to do some back of the envelope math, 80 is the top of the cup, 55 is the bottom of the cup. The difference between those, the cup is 25 points. Usually the handle will be 30% of the size of the cup. So if the cup is 25 points, what's 30% of 25? Well, it happens to be $7.50. So the bounce should take us to about from 55 up to about 62.50. That's where the handle, that's where this rally could take us in the short term. But any move up towards 62.50 would be like the golden spot to get short Square. The artist, the company formerly known as Square, is now called Block. We would want to get short somewhere around 62.50. Markets are in a corrective phase. Markets are now in sell the rally mode. We highlighted some of the exhaustion criteria, the divergences, and some of those things, and it's played out really well. Friday of this week, we get Fed Chair Powell at the Jackson Hole meeting. What he says and what he indicates as far as interest rates in the future and so forth will move the markets. Dick's Sporting Goods, like we talked about, Intuit, Lowe's, Nvidia, Snowflake, Toll Brothers, all reporting this week as earnings are winding down. Hope you enjoyed the market roundup. Have a great rest of your day. We'll see you next time.